This time I'd invite Ms. Gloria Eduardo, who would share with us a little bit about the presentation yesterday, giving us just a little bit of a summary before we go into the analysis. Thank you very much. My name is Lisa Gale. I'm the Executive Director of the Chamber, and it's my pleasure to chair today's proceedings. Thank you. Gloria?
Thank you very much, Lisa. Good morning, everyone, and thank you all for coming. Let me also publicly thank the Chamber of Commerce for allowing us to partner with them in this very important function in our calendar every year. And our team who worked long hours into the morning, actually it was 3 a.m. this morning and not 4 like last year, to prepare the tax news that has been distributed and many of you would have already received by email. I'm just going to spend a few minutes summarizing the main tax proposals in the Minister's presentation last night, then I'll hand you over to the panel. The Minister spoke about the creation of a national health insurance fund to which both employers and employees would contribute, which he believes will take 2 years to implement. For those of you as old as I am, you may recall that up until 1993, national insurance contributions actually included a health service portion, which fluctuated between 1% and 2.5%. So it seems something along those lines that he may implement again. In the meantime, he said, hopefully as a temporary measure, he suggested the introduction of a levy to be effective from September 1, 2016 to fund health care. He termed this the National Social Responsibility Levy and advised that it would be applied at 2% on the customs value of all imports and on domestic output, with the exception of goods for use in the manufacturing, agriculture, and tourism sectors. In order to avoid confusion, we certainly hope that clear guidance will be provided as to how and on what this levy will apply, especially with regards to local output, and that the necessary enabling legislation will be drafted and passed promptly. This levy, he said, is the main revenue generating measure, and is expected to generate $142 million per annum. With regards to the banks, the Minister proposed to extend or reintroduce the tax on assets. As you may recall, this was initially introduced in September 2013 and was initially supposed to end on March 31st, 2015. It had been extended for a further year until March 31st, 2016, and now it seems that this will be in place indefinitely, and furthermore will increase from 0.2% to 0.35%. He didn't, however, state whether the tax on assets that applied to deposit-taking institutions, credit unions, and insurance companies would similarly be reinstated and increased. The Minister also proposed various amendments to the Special Development Areas Act and the Tourism Development Act. The Special Development Areas Act provides relief for approved developers who construct or improve a building or a structure in certain defined geographic locations in Barbados, and to persons financing such work other than a commercial bank. Persons financing such work are exempt from income tax on interest received, whereas approved developers are exempt from import duties and VAT on the inputs for the construction or renovation of the buildings, withholding taxes on repatriation of interests, land tax, and property transfer tax payable by vendors on the initial purchase of the property. An approved developer also pays corporate taxes at the rate of 15% and is granted initial and annual allowances on industrial buildings of 40% and 6% respectively, and on commercial buildings of 20% and 4% respectively. Currently, the legislation covers 4 areas in Barbados. That's the Carlisle Bay redevelopment area in St. Michael, Speightstown in St. Peter, St. Lawrence Gap in Christchurch, and the conservation area, which is defined in Section 2 of the Soil Conservation Scotland District Act. The Minister has now proposed to extend the areas to which these incentives will apply to cover northern Barbados from Speightstown in St. Peter to Harrison's Point in St. Lucie, southeastern Barbados from St. Lawrence Gap in Christchurch to Ragged Point in St. Philip, and the city of Bridgetown as defined by the Chief Town Planner in the Physical Development Plan of Barbados. This measure should encourage investment and developments in these areas, but of course, again, the devil is in the detail and they have to clearly define what areas will be covered. The Minister, also recognizing the concerns of the tourism industry, proposed amendments to the Tourism Development Act to allow developers flexibility in accessing waivers for property renovations that are carried on over a period of several years. In the interim, he proposed that a temporary administrative solution to the problem be put in place. This seems to be a sensible measure, as the current strict interpretation of the legislation effectively penalizes hoteliers who are unable to renovate their entire hotel property within 1 year. The Minister proposed a tax amnesty with respect to VAT, income tax, and land tax from September 15, 2016 to February 15, 2017 on penalties, interest, and other charges incurred up to September 14, 2016. We welcome this amnesty, and it should result in some taxpayers clearing arrears of taxes. However, we note that the Minister did not state whether the amnesty will also apply to arrears of corporate taxes, and we hope that this can be clarified. In addition, we would implore that the Ministry of Finance provide clear and unambiguous guidance to the Barbados Revenue Authority as to how the amnesty will be implemented. In our experience with similar amnesties in the past, there has been much confusion and time wasted trying to determine what was covered by the amnesty and how it should apply. The Minister proposed the possible creation of duty-free zones in certain areas of Barbados to permit both visitors and locals to purchase items free of duty. However, he did state that all the pros and cons would have to be examined first before creating the legislative framework. I know that the current president of the Chamber of Commerce and also Lalu have been big proponents of this measure, and they will undoubtedly be pleased, assuming, of course, that it is implemented in a timely fashion. In addition, the Minister announced the removal of the requirement for yachts staying in Barbados waters for longer than 6 months to pay duties. This should encourage yacht owners to have repairs and maintenance performed in Barbados and the consequent development of the necessary skills to carry out such maintenance. It may even encourage some enterprising entrepreneur amongst us to create a new marina. The Minister noted that the Fiscal Incentives Act, which has been around since the mid-1970s and provides concessions for manufacturers, became incompatible with the rules of the WTO at the end of last year. He announced that a new regime would be permissible under the WTO rules had been created and was before Cabinet for approval, but he gave no details on the proposed legislation or how it would meet the WTO rules. There were some notable omissions from the budget speech with respect to personal taxes, for example. Having made several changes to the personal tax allowances and rates last year, the Minister seemingly chose to ignore numerous requests to reinstate the deductions for pension contributions and home improvements in particular. He did, however, make one concession with respect to registered retirement plans annuity contracts, whereby he proposed to allow individuals to withdraw up to 15% of their total savings accumulated, subject to a withholding tax at a rate of 16.5%. He didn't, though, make it clear whether this would be the final tax imposed on the amounts withdrawn. The Minister did not propose to make any changes to the VAT Act, and as I mentioned last year, it seems that the rate of VAT will be unlikely to go back to 15% in the near future. You may recall that the increase to 17.5% was initially supposed to be a temporary increase. The Minister also chose not to make any changes to the corporate tax regime, having made several last year. Similarly, having amended the bands on land tax rates last year, no changes were proposed with respect to land taxes. However, don't expect your next land tax bill to remain unchanged, because this year, triennial revaluations are due. And lastly, my pet peeve, let me again express my sincere hope that the enabling legislation to implement these measures will be drafted and passed in a timely fashion. Thank you very much. I'll just pass you back over to the panel.